You definitely need the general and product liability coverage, which in most cases we provide on one policy. So it's usually a combined policy.
Okay, explain the difference between general and product.
Yeah. So general liability is, and this may not apply, but the policies are written to be all inclusive and you can't like pick and choose. So the portion that relates to the general liability is if you have maybe a brick and mortar store, or you have um, a home office, you have a leased warehouse, maybe a storage unit, anything like that it's more of your like slip and fall type coverage. It could be slander, libel, those sorts of coverages. It's more of what we consider premises liability. So if somebody, maybe you do have a brick and mortar store and somebody, or an office, for example, and somebody comes on your property and they slip and fall, then the coverage is there for that. Then the product liability portion is for damage to somebody, your product damages somebody's property or harms, it's damage to property or injury to persons. So, it's two components that make up the liability portion.
Okay. Now, the expense of, I know this is very, I mean, how long is a piece of string? What is, what kind of expense is associated with general and or product? And there's a big difference.
Big difference. Well, there's a big range. You have, for example, and I don't ever mind sharing what we do because my private label brand is very small, and my daughter now has graduated college and doesn't help with it much. And I've been so busy writing the insurance, I just kind of keep it open, and eventually she'll take it back over. But we do paper goods, so it's very, very low risk, and it's private label. So my insurance runs, $700 a year. And it does vary, based on your sales volume. So if when we're running, lower sales volume than most. So if you have, for example, you do supplements, or you do beauty, ingestibles, which are really hard to handle, or find coverage for, baby, pets, those sorts of higher risk type items, you're looking at a much higher rate to begin with. And then dependent upon your sales volume, it goes up the higher sales you have because you have more risk out there. But if you're doing, the classic garlic press type product that's not ingestible, not used for babies or pets, anything on or in the body, you're looking at still in that low rate risk, because I can put you with a more preferred company, versus having to go to a high risk company, which the rates are higher. So it really, and it's not a great answer, but it really is just across the board. Just think, if you have a lower risk product with lower sales, that's the lowest premium, versus highest risk, high sales, and then anywhere in the middle.